Maybe not. Turner there. It's 8:42 here. We're at 18 before 9. Advisory services offered through Second Half Financial Partners, LLC, an SEC-registered investment advisor. The opinions voiced and information provided in this material are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual. To determine which investments are appropriate for you, please consult with a financial advisor. Second Half Financial Partners, LLC does not provide tax or legal advice. Please consult your tax or legal advisor regarding your particular situation. Yeah, fast-talking legal beagle means it's time to double-check and see what's going on with your money with the help from Phillip Statler of Statler Financial Services in downtown Sebring. Phillip, we're finally up to crunch time for the Federal Reserve, and I got to believe everything's basically going to sit on their hands until 2 this afternoon. How about you?
Yeah, I don't see much happening between now and the announcement coming out at 2 o'clock, though. We are seeing some upgrades, some downgrades, so we do have some stocks moving around a little bit, and a little here, a little there. But I don't anticipate anything major happening until that occurs.
That's kind of be one of those, okay, fine, we got reports to talk about, we got economic factors and whatnot. NVIDIA's got a few challenges after getting banned in China. We got a couple of companies that are reporting earnings, but macro-wise, I think we made our adjustments yesterday. They took some money off the table at the end of the day. Dow ended up down 125 points. You and I will remember when 125 points was a disaster. Yesterday it was only a little over 0.25% on the Dow. Standard & Poor's down 8.5%, NASDAQ down 14 3/4, and that sounds to me like basically a little bit of bet hedging depending upon which way the Fed goes this afternoon, right?
Well, again, we've seen the markets, the indexes hit some relatively close to all-time highs. And so, again, with interest rates looming and some other numbers coming out, I think we're just seeing a little profit taking here and there.
That was kind of my read on the thing, too. Take a few profits, take some extra money off the table, and reallocate it based upon what happens with the Fed this afternoon. And lest anybody's been living in a hole, that 2 o'clock that we're talking about is the interest rate decision from the Federal Reserve's Open Market Committee. And the drama, a couple of months ago when we had a written dissent, I was kind of poo-pooing it, saying they disagree all the time. What's new about that? But this one's going to be interesting drama-wise. Stephen Moran, the president's economic advisor, joined the board just at the last minute before the meeting began on Tuesday. And then we've also got Lisa Cook, who the president is trying to get the courts to let him fire her. So we've got a mortal enemy and a dear close friend now all of a sudden with votes on the board. The dissents might be more interesting than the decision itself, wouldn't you think?
It could very well be. It's going to be interesting to see. We can pretty much count those two things. Those two people are going to cancel each other out. That's for sure.
Yeah, most likely. The other element to today is this is the meeting in which they put out what they call the summary of economic projections. The dot plot we talk about to see what the individual voting members of the Open Market Committee expect as far as their thought for rate cuts and where the rates are going to be going. And that kind of is, that really is the thing that I suspect investors are going to be watching closer because, there's a little bit of twittering as to whether or not we're going to get the slam dunk 0.25% or the long shot 0.5% cut. And you were saying this earlier this week, there's a possibility they'll disguise a 0.5 point cut as being last month's 0.25 point they should have done plus the 0.25 point this month. We'll get a better picture as to where the votes are when we see the dot plot later on today.
We will, and that's true. And then, of course, after 30, 45 minutes after that, we'll get the speech or the press conference from Powell, and that always, the rate cut is one thing that everybody looks at, but then what he says is like under a microscope, and so then we see more changes occur when that happens.
Oh, yeah, and I always describe the market plots during those times. The charts from what the markets do is it looks like a seismograph after a Japanese earthquake. It's just utterly amazing, the reactions up, down, and sideways. One element to the Federal Reserve that you and I haven't talked about recently because it's kind of been a set and steady policy is unwinding the balance sheet. As part of their money tightening policy from the Fed, they started selling off on a regular basis all the home mortgages that they bought during the pandemic in an effort to stimulate the economy. Now they've been unwinding that. And one of the major brokerage firms came out with a statement this morning saying, we really think you guys ought to cut that out for a while. And that would be an under-the-radar move to loosen the money supply a little bit that wouldn't communicate the Armageddon implications of a half-point rate cut. I've been expressing concern that half-point cuts end up communicating things to the market that the Fed really doesn't want to communicate. But if we suddenly said, yeah, we're going to hang on to those mortgages a little longer, that has a similar effect, but doesn't make the communication of a half-point rate cut quite as strong, does it?
No, it doesn't. And I think I read somewhere a while back that they had started to do that a little bit. They had, well, they were still unwinding, but they had reduced the amount they were doing it by, because there for a while they were doing it at a pretty rapid rate. And so I think that they had already pulled back some. I'm sure they got more room, obviously, to go, but that would be a way that would still keep more money in the money supply without really letting people know, other than the economists that follow that stuff.
Absolutely. So we get a quiet impact without the public impact of a bigger rate cut. Like they both said at the beginning, we're kind of sitting on our hands this morning as much as anything, but there is some economic news out, and it's not necessarily all good. This might be good, might be bad, but just the Mortgage Bankers Association put out their weekly figures for mortgage applications, and refi applications for mortgages were up like 60% last week after a drop in the prevailing mortgage rates, and you and I both reacted to that as saying, geez, why in the heck didn't you wait till next week after we get our rate cut? Because we know the prevailing mortgage rate will be down at least a little bit after the Fed cuts rates. The other part, though, is the housing start numbers and the building permits came out. And after a decent month last month, we kind of fell even below what they thought was going to happen, didn't we?
Yeah, we really did, Dave. Housing starts and building permits both came in at 1.31 million. The expectation was for them both to come in at 1.37 million. Now, that doesn't sound like a big difference, but it is. And when you take that and compare it to the previous month, we're down. Previous month we were at 1.43 million. So that's a pretty substantial decline in housing starts. And granted, up north, I mean, I think they seasonally adjust these numbers, and you could start to see where maybe up north some of that might slow down, just because winter is fast approaching.
Now, when you end up seeing 100,000 fewer housing starts over month to month in absolute terms, that's generally a scary number. You and I have harped on it, but the point's taken. Big ticket things like home building affect so many ancillary businesses down the line. Even the even missing the projection by 20,000. That's a lot of money that's not going into the market that we kind of thought was going to.
Well, yeah, going into the economy as a whole, and that you're right, that does affect communities, that don't have that construction going on.
Absolutely, which kind of puts the entire package of economic information we've gotten over the last week, where basically retail sales were about the only really bit of good news that we've had, and we're hoping that doesn't indicate desperate running up on plastic. Other things going on. I got to make mention of it. Google is now officially a market cap of $3 trillion for the first time. Joins Apple and Nvidia as being the rich sons of guns on the market. $3 trillion for Alphabet. That's actually, it's becoming an almost common benchmark, and that's amazing to me, isn't it?
That is. That's a lot of money. We did have Nvidia and China in a big dispute. China's, I think, not allowing some of Nvidia's chips coming in. That's affecting Nvidia. They're actually down for the week. They're down 1% this morning. I think I saw they were down like 2 or 3% yesterday.
I kind of read between the lines on that and say China is really saying, heck, we've already stolen the technology for the chips. We don't need yours anymore. They can reverse engineer just about anything. They're obviously at stake in the trade negotiations, because if we don't make nice with them, we're going to end up losing a substantial market for one of tech's. Something else that becomes part of the employment picture, employers are beginning to take away the 401k matches they used to do. You put in $1,000 into your company's 401k. Companies regularly, commonly match it 1 for 2 or 2 for 1 or 1 for 1, whatever the ratio happens to be. Sherwin-Williams announced a little earlier this week that they're no longer providing a match for their company 401k plans, which has to put some people's folks on edge, because that's one of the best reasons to hang on to a job longer than you otherwise would.
Yeah, that's sad. That really is starting to speak volumes, because why would they do that? They're seeing a slowing in their revenue, and their bottom line is being affected. That's the only reason I can think of them to stop doing that matching contribution. I mean, the whole 401k market was predicated on employers, matching contributions. I know when they first started, that wasn't the case, but that was because we had 401ks and we still had pensions. Today's world, we have 401ks, but the pensions have pretty much gone away, except for, even a lot of government entities now don't have pensions. So that is concerning, Dave, that if that starts to be a movement across the board, that's going to impact employees and their retirement.
Absolutely. The thing that other hit me with that was that might be, and I'm afraid to say it might be one of the ways that the companies are controlling their expense figures in order to keep prices in line, even with some increased input costs from tariffs. And I'm hoping that isn't the beginning of a trend. That's not a cost cut I really want to see happen.
Absolutely not.
Absolutely. Hey, we had a couple of reports out this morning, and one of them is a household word. How's General Mills selling their Cheerios these days, anyway?
General Motors, General Mills, they reported what we call lackluster fiscal report for the quarter. Earnings came in above expectations, but one of their key numbers, their organic sales growth, was just not quite, but almost in line with expectations, and that's putting pressure on General Mills this morning. They're down a little over 3%.
Ouch. Any other tidbits that you found from the company's reporting? I mean, we're way at the end of earnings season, but we had one household name. Anybody else have a tidbit out
Yeah, we
there?
got Netflix got upgraded by a company called Loop Capital. That's got them trading up almost 1.5%. Zillow Group, they got upgraded by Bernstein. And that's got them trading up about 2.5% this morning.
Cool. Resetting the table for the morning, mostly just a profit-taking day. Minor losses on the major indexes yesterday. 45 minutes before we open on an earth-shaking day at 2 p.m., and I'm beginning to sound like a gossip columnist. How are we doing this morning?
Mixed bag, Dave. We got the Dow is actually up a little over 0.1%. However, everything else is kind of red. The S&P 500 is flat right now. The NASDAQ 100 is flat right now. The Russell 2000 is up about 0.2. So it's going to be an interesting start to the day. On the other side, we got silver has kind of given up some of those gains, down 1.8% to $42.14. Remember, yesterday morning it was bumping its nose on a 52-week high. Gold down 0.33%, $3,713 an ounce right now. Crude oil down about 0.4 to $64.26 a barrel right now.
I like it better in the 63s, but as long as it doesn't stay over 65 for long, I'm happy. Asian Rim market was kind of a mixed bag. The two Chinese markets closed. The one in Beijing was up by over 1%. The Shanghai market, though, was only up by about 0.33%. On balance, the Asian Rim was positive. Europe is a decidedly mixed bag this morning. Nobody's moving a whole lot in any one direction or another. Average European index is up just a couple of 0.01%, up but not by much, halfway through the European trading day. Getting my retirement act together is something that gets more important with every passing year, and I'll bet it is to a lot of others too. How do I find you to get my act together for retirement, Phillip?
Dave, that's why I created the Core Retirement Design. Give us a call. It's a 30-minute conversation. We'll make sure that you're on the right track to the retirement you always dreamed of. If not, hey, we'll talk about what changes you need to make. Again, that number to call, 863-382-0037. And then catch the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk, 7:30 a.m., 95.3 FM.
And you and me tomorrow morning again to talk about what the seismograph looked like on the market charts about 2 to 3 p.m. this afternoon. Fair enough?
Fair enough, buddy. Have a great day.
Catch you then. It's 105.7 Light FM and Statler Financial Services. Phillip Statler.
Folks, again, I want to thank you for joining us today. Hope your week's gone well so far. Talk to you again tomorrow. Bye now.